They're really going to look at you as an individual. Do you have the cash flow with your other businesses or income sources to cover this new venture, right? So they can see your background. What have you done? It might not be exactly the same industry that you're purchasing this new franchise, but what's your experience? Like, why are you qualified? Will the bank make a loan, a very high leveraged loan to you? Are you a good risk, right? And that's essentially what they're looking for.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello, and welcome to another episode. And on today's episode, we're going to talk about the 5 C's of SBA loans: capital, credit, collateral, capacity, and character. So let's start with number 1, which is capital. Capital refers to your equity injection or down payment. And specific to franchises, if this is a new franchise, not an expansion where you're opening up another unit, a second or third unit, we're talking about you're starting a new franchise. It's approved in the SBA directory. Typically 15% down. It will be 15 to 20% depending on your strength. And the banks all have their different underwriting guidelines as far as what they'll do, but usually on a startup type business, you're looking at 15% minimum down payment. Then we move on to credit. Credit, anywhere from 680 to high 7s, 8s are recommended. Can we get SBA financing below 680? Yes, but you stand a better chance, obviously, with stronger credit score. Collateral. Anytime you're utilizing the SBA 7A, they're always going to look for additional collateral. It could be your primary residence, could be rental properties. If you don't have either, they may look for additional hard inventory you may have. So there's always going to be a collateral ask for loan approval. So just be aware of that on any SBA 7A. They're going to look for additional collateral. Capacity. Capacity refers to your ability to generate income. So if we're looking at a franchise, for example, and you're a W-2 employee, spouse is a W-2 employee, and now you want to start a new business, and this is a new venture for you. Although you're taking a proven model franchise, which is approved, and they have 200 units out there, you're buying into a franchise that's got a proven model and somewhat of projections that you can use in their offerings and create a pro forma for your new business.
Are you looking for capital for your business? Whether you need to get new equipment, finance your accounts receivable, raise working capital, or acquire commercial real estate, SBA Exchange can help you get approved and funded. SBA programs can also fund ground-up construction projects. The process is simple, and the initial consultation is free. Simply book a call. An advisor will call you at your desired time. We have built relationships with the top SBA lenders. We know their lending appetite. We will source and connect you with the appropriate lender. You will not waste time trying to figure out who to apply with and how to get started, and follow the process through to completion. We have streamlined the lending process from A to Z and work with you on all forms and documents to expedite your loan approval. SBA Exchange is the marketplace for SBA financing.
They're really going to look at you as an individual. Do you have the cash flow with your other businesses or income sources to cover this new venture, right? Because they want to make sure that you're not putting your last dollar into this deal. You have no other income coming in. It might take 6 or 12 months to get this business profitable, right? So they're looking at compensating factors always on these type of loans. And then last is character. When it comes to small business administration franchise loans, banks not only want to ensure the numbers line up on paper, but they also want to prove that you have a proven ability to run and manage a business, right? So it's very important to take time to put together your executive summary, to do a detailed resume so they can see your background. What have you done? It might not be exactly the same industry that you're purchasing this new franchise, but what's your experience? Like, why are you qualified? Will the bank make a loan, a very high leveraged loan to you? Are you a good risk, right? And that's essentially what they're looking for. What's your experience? What have you done in the past? What's going to make you a good owner operator of this business? And that's really critical. So those are the 5 C's of SBA loans: capital, credit, collateral, capacity, and character. So anyways, we're going to dive into more and more episodes where we bring on specialists to talk about the underwriting process. We've talked about the forms needed. There's a Form 413, there's an application, there's a resume form. We even have templates for pro formas. These are the items you need when financing a business, whether it's a business acquisition or you're buying a franchise, or potentially you're starting your own business, which is eligible potentially for SBA financing. And there's other ways too to come in with a down payment. Maybe you can look at your 401k. You might be able to borrow against your 401k. There's these ROBS rollover plans where you can potentially roll over some of your self-directed funds. There's unsecured lines of credit. There's equipment financing. There's a lot of different financing tools to put into the capital stack. But obviously, the highest, best use of funding is SBA for these type of acquisitions. So anyways, hope you enjoy the show, and we'll see you on the next one.